Hey everyone, Coach Investor back to another video for today. So let's talk a bit about Teladoc. We had some recent news. They've updated their guidance. They had a whole presentation at the JP Morgan conference. So we're going to talk about some crucial numbers there. Look at the current state of the company, the analyst estimates, and then at the end, we're going to have a look at the graph. So if you're interested in that, sit back and relax. Now, first things first, they came out with an updated guidance. So total revenue for the year ended 2022 will be in the range of $2.4 to $2.41 billion, including approximately $1 billion from the company's BetterHelp mental health product. Remember, they acquired BetterHelp back in 2015 for around $4 million. Right now, $1 billion revenue. Quite a good investment, unlike Livongo, for now. The company also said that it expects adjusted EBITDA for the year to be consistent with the outlook that they provided. Now for the quarter that ended, so Q4, they now expect revenue to be in the range of $633 million to $640 million, and they expect adjusted EBITDA to be in the range that they provided previously. So that's obviously great to hear. When you guide for something and suddenly you come out with an updated guidance on the upside, everybody loves that. But during the presentation, during the conference, they did give us a bit more information about, well, Primary 360, BetterHelp, and then the whole Teladoc health ecosystem. So we're going to go into that. But before, if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. All right, so first things first, the stock is down 70% since last year. It now has a market cap of $3.87 billion. And this is what analysts are now expecting. Not expecting, but the estimates when it comes to the price target. So the majority of them have a hold rating. Right now, the difference between the target and the current price, it's 38%. The average sits at $32. We're now at 23.8. So currently revenues for the last 12 months, it's at $2.3 billion. Free cash flow positive, that's nice. $193 million in the last 12 months. Obviously, return on equity has come down tremendously because of that Livongo acquisition. Usually, well, my prediction is that we're going to see this line jump pretty fast on the upside. Now, gross profit margin for the last 12 months were close to 69%. Then price to sales ratio in the next 12 months, we're at 1.5 times. So certainly not expensive. All right, so now during that JP Morgan Health Conference, they did give us some extra information with regards to the company. So first of all, the Teladoc Health is the global leader in virtual healthcare. Over 80 million members, 30,000 providers, over 500 million annual health interactions, over 21 million estimated visits/sessions, an NPS score of over 60, and the number one most recognized virtual care brand. Now, we've talked on this channel about the power of having an ecosystem, the power of having multiple products, and they show us this on this graph right here. So 75% of sales are multi-product. As you can see right here, over 50% of telehealth members have access to multiple products. That was certainly not the case if you look, let's say, in 2017. Now, on the chronic care side, you can see approximately 28% of chronic care members are enrolled in multiple programs, and that's also growing each and every year. And of course, when you talk about the whole care solution, you can see it right here, sustain innovation to meet evolving needs of clients and members, and it's still evolving. And how is that evolving? How is that helping the, well, patients? So they give us a couple of examples right here. So enrollment in multiple programs increases member engagement. You can see here, one program 3.4 times, 2+ programs 6.7 times devices checks per week. Now, this obviously leads to better clinical outcomes. So A1C improvements with diabetes plus hypertension, weight management, and mental health programs. You can see it right here. 2 programs, 3 programs. The more programs, the better it gets. Then, of course, with the mental health as an important driver of improvement. So they see here that the average additional weight loss among members also enrolled in mental health decreases by 1.8%. And the same can be said here about the average additional reduction in systolic blood pressure over improvements achieved in hypertension management program alone. which leads us to primary 360, delivering results for clients and members. Again, these numbers are pretty staggering, and this shows the state of, well, the old or maybe even the current healthcare system. So with regards to engagement, we start with that. So 65% of members did not previously have a PCP, a primary care physician. Then the next step is prevention. You can see lots of improvement here as well. After that, you have detection. So 37% new diagnosed diabetes, 25% newly diagnosed hypertensions. After that, you have clinical impact, improves it as well. Then at the end, a positive experience, over 70 consumer net promoter score or NPS. And then this leads me to BetterHelp. So of course, we've seen the numbers before. So an estimated $1 billion in revenue for 2022. You can see here the huge increase over the years. Over 1 million people utilizing therapy, over 45 million interactions with therapists, and over 25,000 therapists providing care. Now, they did ask during that conference whether or not it might maybe be a good idea to just spin it off, right? The BetterHelp be one business and Teladoc and the rest be another business, because, well, we see how much improvement there has been with BetterHelp, maybe for the company's sake, because it was a great investment, right? You pay $4 million and now it's generating approximately $1 billion in a year. Pretty good investment. But I did say because this has become such a great success, it is also providing more data. It is also providing more, let's say, clients, users of the whole ecosystem. So it's basically used as a funnel. So right now, no, they don't see it as a spin-off candidate. And then going back to BetterHelp and the flywheel there. So at first you have scale, so more data, more innovation, more matching options. It goes round and round and you get quality. So better engagement, better retention, more word of mouth referrals. Again, they can use this as a funnel towards all the other products that they offer. And so although I don't own Teladoc anymore in my portfolio, and it has been a 1% position, I use that cash for something else. I always said the business itself makes sense for the long term. I truly believe this is going to be a success. Right now, for me, it's just not in my portfolio anymore. I keep following the company because it is interesting. And as we've seen, the results speak for themselves. Of course, the stock is down heavily. Of course, that Livongo acquisition was extremely expensive and hurt shareholders. But overall, you can see that the business right now is on the right track. Of course, do share your thoughts down in the comments below. Now, before we end, let's have a quick look at the graph right here. So right now we're under the 20-day moving average, we're under the 50-day as well. When it comes to RSI, we're at 38.4, so nothing much to say there. When it comes to the MACD, we're still on the bullish side, although we're still under zero here. Let's see if we can continue. This is again on the weekly chart. If I zoom in, you can see that we tried a little bit to go over that 20-day moving average. We got rejected, so probably next coming days, again, Thursday, CPI report, going to be an interesting day. Let's try and see if we can push back and go over that red line right here. If not, there's always next week. And so to conclude, although the stock might be broken, the company right now is back on the right track. Previously, you can watch my videos. I said I was not very happy with the way management was communicating with shareholders, not because the price was going down, but just because we had earnings, and a couple of weeks before, they said something else at a conference that was much more positive than the reports that they showed us. So right now, maybe communication is key, and let's see what actually happens. In the next earnings report, we'll get way more information. But overall, right now, I do see it go in the right direction. Obviously, do share your thoughts down in the comments below. And if you enjoy this type of videos, leave it a thumbs up and subscribe if you have not. And I'll see you all in the next one. Bye-bye.